What if everything you're seeing right now, the crashing charts, the headlines screaming recession, the liquidations in crypto, isn't the beginning of a collapse, but the start of a reset? While Wall Street cries foul, China retaliates, and Bitcoin takes a nosedive, there's one man at the center of it all, Donald J. Trump. And like it or not, he's flipping the script on the global economy. This feels more like 1971, when Nixon took the US off the gold standard. Back then, the world panicked. Headlines screamed collapse. But behind the scenes, it was a surgical pivot that completely reshaped the global economy. That's what this is. Not chaos, not collapse, a calculated power move that's going to catch most people completely off guard. And the best part, history shows us when everything looks the worst, the biggest opportunities are born. Are you listening? Because years from now, they'll look back at this moment and they will call this the Tariff Tantrum, the ultimate by the blood opportunity of the entire cycle. And here's the thing, we've seen this movie before. Go back to 2015 and 16. China's currency started breaking down. Capital began leaking out of the system. And right in the middle of all of that, Bitcoin went on one of the biggest runs in history, 100x, straight up. It was a great time to be alive, ladies and gentlemen, a great time to be alive. And I feel like we might get another taste of that. That same setup, it's starting to line up again. If you want to understand what's really happening and how to position for what comes next, guys, I got you. Let me break this down. Donald Trump just kicked off what may go down in history as the Tariff Tantrum, a moment the establishment feared, the markets misread, and most Americans failed to grasp. And while the media spins fear and chaos, behind the curtain, Trump is executing a full-blown economic power play. In classic Trump fashion, his posts lit up social media, telling everyone, don't be weak, don't be stupid, don't be a panikin. He invented a new word. Sure, it reads like a reality show tagline, but under the sarcasm is a serious shift, a return to hard-line trade tactics that made America rich in the first place. Look at Europe. They're ready to go full scorched earth, threatening retaliatory tariffs, puffing their chests, and then they folded. Now they're talking about 0% tariff deals. Meanwhile, they're quietly proposing 25% counter tariffs on US goods behind closed doors, trying to save face. Trump's not stopping at tariffs. He's calling out the hidden barriers too. The strict local rules, endless permits, and layers upon layers of red tape. The secret walls that stop American products from entering foreign markets. Imagine this, trying to sell lemonade, but every street corner you go to, you have to have a new permit, a new fee, a new local rule. That's what US businesses face overseas and even internally. And that Trump is even deregulating that, offering things to us that we would have never even thought to be asking for. This is the sound of leverage echoing through the halls of global power. While the usual suspects huff and puff about retaliatory tariffs, American allies are making moves. They're doing it fast. Japan wasted no time. After a direct and very constructive call with Japanese government, President Trump directed his Treasury Secretary and trade representatives to kickstart negotiations with Prime Minister Shigeru Ishiba's cabinet. Did I get that right? I don't know. The goal is nothing short of ushering in a new age of global trade between the US and Japan. This isn't a photo op deal. This is one of America's most critical manufacturing partners coming to the table in full alignment, signaling that the old globalist trade regime is losing ground fast. Let's talk about Israel. Israel also hit the gas pedal and went all in. Prime Minister Benjamin Netanyahu made it public. Not only will Israel eliminate all trade barriers, but they're also pledging to completely erase the trade deficit with the US. How insane is that? Talk about negotiation power. That's a huge deal. This is the kind of bold, unconditional support that only shows up when power dynamics shift radically. This is economic realignment in real time. Trump's stance couldn't be more direct, saying, we're not taking care of our enemies anymore, but we do take care of our friends.
We take good care of our friends and we don't take care of our enemies. We're not taking care of our enemies anymore, but we do take care of our friends.
This is a values-based trade doctrine, and it's now being enforced through action, not slogans. The floodgates have completely opened. Treasury Secretary Scott Bessent confirmed that over 70 countries have contacted the administration to initiate new trade deals, and they didn't wait months to do it. It happened quickly. How quick? Well, this all happened within a single week. That's not diplomacy as usual. That's a geopolitical land rush. These countries can see that things are changing very fast, and they want to secure their spot on the table before it fills up. Because if you're the last one to get the phone call, it might take you months to get your deal done, and you might have to pay the fee, right? This moment represents more than bilateral deals. This is a global pivot away from complacency toward strength. And when strength becomes policy, it draws others in. What we're witnessing is a redrawing of global trade, and the US is back at the center of the map. But before we go deeper, a quick thanks to folks supporting real conversations like this one. Hey guys, real quick, let's talk about security. In crypto, scams are everywhere. And as this bull run heats up, so do the scammers. You've worked hard building your wealth and your portfolio. Don't let one click drain your wallet. NordVPN is your first line of defense. It hides your IP, encrypts your data, and keeps you one step ahead of the bad guys. And here's a pro tip. You can save hundreds of dollars or maybe even thousands on hotels, flights, and car rentals just by changing your virtual location with NordVPN. I just learned this a couple weeks ago. I talked about it in my video. I saved over $300 on my last trip. Most people don't even realize they're being overcharged just because where they live. This isn't a glitch. This is how the website works. With NordVPN, you see the cheapest prices, not just the ones meant for your country. You see, guys, expensive, cheap, just by where your location is. Real savings in just a few clicks. So do yourself a favor, protect your portfolio, unlock the full web, and save while you're at it. Click my affiliate link in the description below and get up to 4 months free and save over 70%. And guys, it costs less than a cup of coffee every single month. This is a no-brainer. If you value your privacy, if you value your wealth, if you value the free internet, it's a no-brainer. Don't wait for a hack and learn the hard way. Trust me, it's happened to me and too many people I know. That's why I was proud to partner with Nord. I use it every day. So use Nord, stay private, stay protected, and stay ahead. All right, guys, let's get back in. While the media debates whether Trump's trade war is too aggressive, the real world data is painting a much clearer picture. China is losing control of its financial stability. In response to US tariff onslaught, Beijing has turned to its oldest playbook, currency manipulation and stimulus. The offshore yuan just hit new all-time low against the dollar, signaling a massive weakening of the Chinese currency. This isn't just about defending trade margins. It's a last-ditch effort to stay in the game. And Trump's camp knows exactly what's happening. Steve Miron, senior economic advisor made it clear. China relies on the United States to absorb its excess production. Without access to US consumers, their economies would grind to a halt. US Treasury Secretary Scott Bessent didn't hold back, saying China's escalation was a big mistake. They're playing with a pair of twos. His main argument is that the US is the deficit country. We import, they export, which means we hold the cards. And now those cards are on the table. The US is moving forward with brutal 104% tariff on Chinese goods, which officially went into effect at 12:01 a.m. on April 9th. No delays, no negotiations, just impact. China is responding with more posturing. Officials vowed to fight to the end. We'll see. Language eerily similar to what they said in 2018 in April, right before entering trade talks under Trump's first term. History doesn't just rhyme here, but it's likely to be repeating. But behind the nationalistic rhetoric lies a darker truth. As the yuan collapses, analysts are warning this may trigger another wave of capital flight, just like we saw in 2015 and 16, when Chinese money flooded out of the country and into hard assets like Bitcoin. Back then, Bitcoin went from $200 to $20,000. That's right, Bitcoin literally did 100x. And now, the setup may even be stronger. China holds over $60 trillion in bank deposits, more than 3 times that of the US. Even if a fraction of that capital starts fleeing the system due to currency devaluation or financial instability, it could become one of the largest demand shocks in Bitcoin's history. Chinese officials are scrambling, drafting emergency economic stimulus to soften the blow from collapsing exports and currency weakness. For decades, China got away with playing both sides: trade surpluses, backdoor subsidies, and lack of financial transparency, all tolerated in the name of global cooperation. But now, Trump has shattered that illusion. Access to US economy is no longer guaranteed. It is earned. And if China refuses to play fair, they don't play at all. That is what real leverage looks like. This is what 21st century economic dominance is made of. Let me tell you a quick story the media won't. Back in 1873, the world moved to the gold standard, but China, they stuck with silver. And that one decision wrecked the economy for nearly a century. While other nations gained power, China lost 30% of its purchasing strength. And with it, their voice at the table, where global economic decisions get made. They missed the monetary pivot. They stuck with the old system while the rest of the world moved on. And it crushed their economy. Inflation soared, their currency collapsed, and they were left in dust. Now fast forward to today, and it's deja vu all over again. China's been hoarding gold like 1971, stacking reserves, trying to prepare for a return to the old monetary order. Some estimates say they've got over 20,000 tons of gold stashed away, way more than they report. But here's the problem. They're building for the past, because while China's betting on physical gold, the US is quietly positioning itself for the next monetary system. Just think about what happened. Bitcoin mining is now mostly controlled by the US after China banned it. BlackRock, Fidelity, and even the Trump family now, they're all piling in Bitcoin. In China, they've banned Bitcoin mining more times than fortune cookies have handed out bad advice. What are they doing? Wake up, China. Wake up. Handing over 60% of the global hash power practically overnight. So while China clings to a shiny relic, America may have just leapfrogged them into the future of money. And history has shown us time and time again, those who fail to adapt get left behind. And that's exactly why Trump's turning up the heat on the Fed. And he's not leaving anything to interpretation. In one of his latest posts, Trump fired off a direct shot at Powell and company, posting, "There is no inflation. Cut rates now." Loud, clear, and most importantly, strategically timed. While the Fed clings to outdated CPI reports and recycled narratives, Real-time inflation data tells a different story. You know that if you watch the channel. According to TRUFLATION, inflation is currently at just 1.46%, and it's been trending lower for weeks. Despite that, the Fed continues to behave as it's still stuck in 2022, ignoring signs that the economy is weakening fast. But the cracks are obvious. The ISM Manufacturing Employment Index, a key signal for factory hiring, just tanked to 44.7. That's deep in contraction territory, well below the danger line, and a clear warning that layoffs are picking up fast. At the same time, the Services Employment Index plummeted to 46.2. It's the second lowest point since COVID crashed in 2020. Employment is softening, consumer spending is tightening, and the broader economy is flashing warning signals at every turn. But the Fed continues to posture, talking tough, increasingly disconnected from economic reality. Meanwhile, the markets are already shifting. Bond yields are falling, rate cut expectations are climbing, traders are pricing in relief whether Powell likes it or not. At this point, the Fed isn't leading, it's lagging. Trump knows that monetary policy is political leverage, and he's using it to apply maximum pressure. If the Fed doesn't act soon, it won't be Trump pushing them. It'll be the markets themselves. And when that happens, it won't be gentle. Over the last week, risk assets got absolutely wrecked. There's no sugarcoating it. The crypto markets saw over $1.6 billion in leverage liquidations, a full flush out, overextended long positions across Bitcoin, ETH, and everything in between. Ethereum dropped to a 2-year low, shaking out everyone who bought the top and thought they were early. Meanwhile, US equity markets, especially tech, slid deeper into bear territory, confirming what insiders have known for months. This isn't a healthy pullback. It's a systemic unwind. But amid the carnage, something important is being missed. The VIX just spiked above 60, an extremely rare event that historically doesn't happen during calm corrections. It happens during capitulations. Think of it like the financial system's smoke alarm going off, loud, piercing, and warning that the fire might already be spreading. And historically, when the VIX breaks above 50 for the first time in a month, the data doesn't lie. It's been a statistically strong buy signal. Over the next 3, 6, and 12 months, markets tend to rally hard. Why? Because the worst case fear is already priced in. While headlines scream, Bitcoin is breaking, the truth is, Bitcoin is holding up far better than most of the Magnificent Seven. Since Trump's tariff push began, Bitcoin has outperformed nearly all major tech stocks, with only Microsoft and Google maintaining better relative strength. This is resilience in the middle of a macro reset. And the institutions, well, they're noticing. According to Standard Chartered, Bitcoin isn't just a risk asset anymore. It's evolving into a hedge against US isolationism and tariff risk. As fiat systems become weaponized through trade policy, Bitcoin stands out, neutral, scarce, and portable capital. Now, yes, some metrics are flashing short-term pain. On-chain data just confirmed a spike in exchange inflow CDD, which in plain English means long-term holders, the ones who've been sitting tight through cycles, are now moving coins to exchanges. And there's only one reason they do that. They don't do it for fun. That's usually a sign that they're preparing to sell, or at least getting nervous. These are strong hands, the conviction holders. When even they start flinching, you know the fear is real. But here's the twist. Let's zoom out. Historically, this kind of capitulation signal shows up late in the game. It's what happens when sentiment hits rock bottom, when forced sellers are exhausted, and when markets are begging for relief. Markets don't bottom in comfort. Oh no. They bottom when the stories are the darkest and the pain feels endless and relentless. And right now, that moment is starting to shape. Most people are completely paralyzed. I am in a lot of private groups, and I'll tell you, people are just sitting like a deer in the headlights. They're watching charts crash. They're doom scrolling headlines. They're listening to billionaires and bureaucrats Tell them it's too risky to buy or too uncertain to act. But if you've been through enough cycles, you know the truth. This is where wealth is made. Not during the pump, not at the top, right now. In blood, in the fear, in the silence before the reversal. Veterans don't try to time the bottom. They don't wait for green candles to start chasing. They prepare, they size correctly, and they execute before the narrative flips. So, what to do now? 1, preserve capital. The first rule of survival, stay liquid. Don't get wiped out by leverage, emotion, or impulse. 2, start scaling in if you've got dry powder. Not all at once, but slow, methodically. Dollar cost average into high conviction positions while prices are depressed and sentiment is in the gutter. 3, ignore the noise. Touch grass, ignore the noise. Stay away from the charts. The same voices telling you to panic now will be the ones screaming, I knew it, once the rally is already underway. 4, watch for catalysts. Tariffs flipping into negotiations, rate cuts from the Fed, and liquidity coming back online. These events don't wait for headlines. They show up first in price. This isn't a moment to react. It's a moment to move with purpose, because when the fog lifts, and it will, the people who took action now will be miles ahead of the ones who waited for permission. But then the opportunity will be obvious, but it will also be priced in. This is how you win. Stay calm, stay smart, stick to your plan, and when the crowd screams, walk the other way. Ladies and gentlemen, I am Kyle Chasse. Thank you for watching. If you enjoyed this video, you found it valuable, do me a favor, destroy the like button. Make sure that you're subscribed and share this video with a loved one who could use the advice. Remember, stay sharp, stack sats, and I'll catch you guys on the next one.